Well, the market got smacked around at the open, and for the most part, it struggled all session. There were a few attempts to lure buyers off the sidelines. Didn't really work. Your major indices did finish off the low of the day. In fact, the Russell, once again, was able not only to climb off the canvas, but hit another all-time record. There were some other unbroken trends, too. Consumer discretionary. Now it's gone from a value play to momentum. We're talking Kohl's, Chipotle. Some of these names continue to rally much, much higher. And the superstar, of course, in that space, Netflix, has just simply gone parabolic. Consumer staples continue to find buyers as well. Kraft Heinz, Campbell's, they keep edging higher and higher. But I thought crude oil was interesting. Crude oil itself is down and it's oversold into this OPEC meeting. But the action in those stocks, especially those with exposure to the Permian and Eagle Ford, really nice. You know, I love Concho Resources. I'm down in the stock. I think it's extremely oversold. But there were some smaller Midland, Texas ideas that were on fire today. And these also have exposure to Wolfcamp and Bone Springs formations. We're talking Diamondback Energy and Matador Resources. Take a look at those two. Now, I know OPEC, the meeting is right around the corner, and I think expectations right now are too pessimistic about this production cut. There may be a cut, but certainly not at levels as deep as we thought they would be. Here, I think it would be suicidal. Long-term, crude oil, I think, is still in play, and I think as long as the West Texas Intermediate holds this trend line, it should be okay. We're entering earnings season real soon. Expectations are very high. We are on the cusp of it. And, well, let's face it, last season earnings went right through the roof. Nobody, of course, expects the same results that we had in the first quarter, which saw revenue up more than 8% and earnings up more than 26%. But look for those names that can beat and offer robust guidance. If they can't, they're going to pay a very heavy price. Even if they check all the boxes, they still could have some hesitation in this market. In fact, after the bell right now, Oracle, they beat, offered solid guidance. That stock only slightly higher. Then there's FedEx, which also beat. They gave mixed guidance, and the stock is down in the after-hour trading. And, of course, before we get to earnings coming out, the next 2 weeks will be earnings warnings. We're going to get a lot of them. After the close, Starbucks is a company that gave us some bad news. They're going to close 150 stores in these heavily penetrated markets. That's 100 more than they normally would. Management said to expect global same-store sales to grow only 1% for the quarter. Wall Street's looking for 3%. We know the market is dicey, but there are some clear trends against, and also keep in mind we've got a clear and vibrant economic backdrop, and that should be one of your main value propositions for investing.